It's another episode of NRG Insights. And at the moment, we're doing a lenders edition, which has been really good, actually. It's got loads of good traction. Speaking to influential people within the lending side of the market and getting their kind of take on the market and any interesting observations that they've got. So on that, I've got James Briggs from Together with me today. Thanks for joining me, James.
Thanks, Marcus. Thanks for having me.
That's all right. No problem. You're the last in the sticker album of the precise special, that special team that you had there. So you're going to be the shiny one. I'm going to put you in there.
Save the best till last.
Yeah, yeah. I thought I'd asked you ages ago. I came back and said you never responded. And I looked and I never sent it. So you were supposed to be on a long time. It's been a long time.
Thank you. Thanks for
that. So tell me about your kind of financial services journey, James, up to where you are now.
Okay, well, we've only got half an hour, haven't we? So I'll try and keep it brief. So I, very similar to most of the people you interview from financial services, it wasn't my dream to work in financial services when I was 15. So I started my career back in 1996 working for a high street bank. I know, I don't look old enough, thank you. This was a time where there was no mandatory education between 16 and 18. So you could leave secondary school on a Friday, 16 years old, and start work on the Monday, which is pretty much what I did. So I worked at the Royal Bank of Scotland for about 3 years, real good grounding. I got into the RBS because that's where I did my work experience at high school. My mum worked at RBS for 30 odd years. And it was quite a good fit. It was a good experience. And that was, interestingly, at a time when the bank was transitioning from old bank to new bank, which basically meant if you work in a branch, you need to sell. So it was an interesting dynamic of, how can I describe this? Second earners in the household that weren't used to selling or any kind of pressure at all. And you had this new wave of younger employees coming in hungry. I was one of them who wanted to sell. And there was a real split. So it was a difficult time for retail banking back then, but great banking.
How did that work actually in there? So in the high street banks you were working, but obviously, like you say, it was an old school way of not selling. How was that transition for people? Because obviously it's kind of moved back a bit in the banks, whereas the selling is a bit of a dirty word again.
Well, I mean, what you had back then was banks were there just to service cash deposits, and then we moved into this sales environment, and a lot of those people who, and a lot of them were older ladies, who got on well with the customers. They've been paying in the checks and the cash for the last 25 years. And all of a sudden, in theory, selling credit cards and personal loans and investment appointments. And a lot of them went off with stress because there was no proper sales management there. There was no coaching, development. It was, you need to sell these products now. And they couldn't.
If you've never done it.
It was really hard. Yeah, it wasn't handled great and it was difficult, and the bank lost a load of long-standing good employees that could have been deployed into non-sales areas. But, it's hard to find a high street bank nowadays, isn't it, unfortunately? A lot of centralisation, a lot of technology, it's kind of killed off. We've just lost the last high street bank in our village, actually, NatWest. Which is it's a real shame.
I've still got to try and find, I've still got to Google it now, because every time we go to the one you think was open, it disappeared. But that's also a sign of the times, right? You don't need to go to the bank.
Absolutely. Yeah, absolutely. So I moved on from RBS to my first kind of role in specialist lending, if you like, which was it was a business called Winslow Financial Services that I joined in 1999. That rebranded a couple of years after I joined into Freedom Finance, who have had the Freedom Finance badge from probably about 2001 up until last year when they rebranded to Arrow. So again, that was a great grounding in specialist lending, advising on second charge loans. Back in the 90s, the late 90s. And I did 3 or 4 different positions at Freedom, worked my way up through kind of advisor, team leader, operational roles, and then operational manager. And I was really happy there. It went through private equity investment It opened an operation in Sweden, opened an operation in Spain, replicated the business model that was successful here, over there. And it was great. And I worked there for about 7.5 years, 7.5 really happy years.
Yeah.
And I got made redundant, which is a little bit of a common theme as we go through my CV, but that's financial services for you.
2008 by any chance? That's kind of
2008, yeah.
Look at that, yeah.
Yeah, no surprises there.
Yeah.
So in 2006, I joined a business called Swift Advances. So I switched from broker side of the fence to lender side of the fence, which is great to give that full kind of 360-degree view of the market, both sides of the fence. And you know what I consider to be my big break was in 2006, which is when Brian West was building a sales team at Swift. He'd recently joined from my group, and he needed a sales guy in the Northwest. And it was a bit of a swinging doors moment, really, because I was having been made redundant the week before. I was with a newborn baby, I might add, in Wetherspoons, updating my CV.
The baby.
Yeah, well, exactly. I couldn't be at home. And you know, in walks Brian West, you know, with his briefcase under his arm as he carries it, and he said, I've just been into Freedom Finance. I was expecting to see you there. So I gave him the news, and then he told me he was looking to build a sales team and they needed a BDM for the Northwest. And the rest was history. I joined shortly after then. Another lender that had recently been acquired by VCs who wanted to, you know, aggressively grow first and second charge lending in the UK market. So joined in 2006, had 2 fantastic years growing the business, you know, taking it from £8 million a month in completions up to 52 just in second charges, which was phenomenal. Especially when you consider the overall seconds market now is worth 120, 130. Business was booming. What could possibly go wrong? Enter 2008, and
I was in commercial finance in 2007. I think I always tell the story, but I didn't know anything about the market. I was taken from a building site to go and work in. I met him at a party and he said, "Go and do it." So I spent 2 years suddenly earning a silly amount of money, just thinking, "This is never ending. This is just going to work forever." And then it changed me. 2008 hit, and you went, "Oh shit, no money."
Yeah, music stops.
Yeah,
exactly. Exactly.
You were in a very different position to me because I was clueless about the market. just what we did. You know, we just gave big loans to commercial people and they paid high interest and everyone was happy. I didn't. It was a massive shock.
Yeah, it's such a shame because Swift never did one securitisation.
Really?
They were a balance sheet lender supported by a syndicate of 7 European banks. But, you know, when America sneezed, you know, and the scandal of all the stuff that was hidden and, you know, the non-payment and all that securitised, then, you know, everyone caught a cold, including us. And, you know, it went from everything's going to be fine to 2 weeks later, we lost all of our funders. So great business, real shame. Still exists today in collection mode.
Right.
You know, but best of luck to them. But at that kind of time, there was no real financial services jobs for someone with my experience. So I could have gone back to taken a 3 or 4 year step back and gone back to selling loans in one of the large brokerages. But what I did was I formed a debt management business with one of my former brokers. Yeah, so back then that was quite popular, particularly in the Northwest.
Yeah.
So we had a lot of contacts, a lot of advisors, and we wanted to. There was a lot of firms making a lot of money from debt management back then, and we wanted to take an ethical approach to it. So rather than kind of buying leads or doing D2C marketing, we grew a debt management business off the back of broker contacts.
Okay.
You know, and a lot, you know, no matter what industry you worked in, everyone was under financial strain back then.
So, well, wasn't it? It's a little bit like I know a lot of mortgage brokers that made money out of the PPI side of things when it was came out.
Yeah. I mean,
you had to move stuff. You had to make money somewhere, and you knew the problems. Like I know it's a little bit different, I suppose, debt management, but it's you couldn't make money doing what you were doing, could you? So
exactly. I mean, there was three things typically that firms diversified into back then. It was PPI, like you say. It was the unenforceable credit agreements.
Yeah.
Where you challenge the terms of the credit agreements, which I could never believe in, really.
Yeah.
I wanted to get back into lending as well, so I didn't want to turn into that poacher.
Yeah. Can't go back to gamekeeper back to poacher again, can you, Carl?
No. And debt management, and I saw debt management as a way that we could really add value to clients. Yeah. And the way we pitched it to our financial services intermediaries was, if you get a clawback, if someone's struggling, one of the first things that they'll probably cancel is not the Sky TV. Yeah. This is not to generalise. It's not the Sky TV. It's not the kids' football coaching on a Sunday morning. It's probably the life and protection cover that they think they're never going to need.
Nuts, isn't it?
It's true, though. It is true. And we built a business off the back of clients cancelling their life and protection cover. Yeah. So there's that flag when that does it. That gives the broker the opportunity to go in, do a full review of the client's circumstances, restructure their unsecured debt to a more manageable level, and allow them to reinstate their really important protection.
Yeah.
And I did that for 2.5 years, there or thereabouts, and sold that business, which was great. So, yeah, we had an insolvency practitioner that took over. Yeah. Which was, really interesting, exciting time. But then, I found myself again jobless.
That doesn't count as redundancy if you sold, right?
No, not really. No, I had some. I had a bit of money in the bank. So we did a bit of property investment. My wife still does that now. So light refurbishment, buy-to-let portfolio.
Yeah.
And I was there.
Does that help you, by the way, having that string to your bow when you're speaking to brokers?
Massively.
As well, yeah?
Hugely.
You understand.
I mean, we're a massive geeky property family. So I work in specialist lending. My wife's a property investor, and my son's an EPC assessor.
Oh, really? Yes.
Yeah.
Covering all bases, yeah.
We're really fun at party. But we all have a slightly different take on things, and it's massively useful for me.
Yeah.
It's been massively useful. And my son Finley, doing his EPC stuff, and property photography, and assisted viewings and landlord condition reports. He does all that kind of stuff freelance. So yeah,
he's got a good customer base in his mum.
He has, yeah. So I was desperate. Yeah, we did that for a bit, and I was desperate to get back into secured lending. So
do you miss it? Did you miss like the hustle of it?
I miss the people.
Yeah.
That's this is a business that's built on relationships.
Yeah.
And much as I love plastering and installing kitchens, I'd rather be talking to people like you, talking to brokers, putting deals together, helping clients. So I was applying for anything secured loan related then. So I applied for an office manager position at Evolution Money in Manchester.
Yeah. And
I got about 5 minutes into the interview and they said, "You're not an office manager, you're a BDM." I said, "Well, take me on as a BDM then." And they did.
Really?
Yeah.
I already know that, but I've come in the door anyway. So
and it shows I suppose it shows the importance of kind of backing yourself and being a bit ballsy sometimes.
Yeah.
That mine could have been the CV that was put to one side. I could have tried to be something that I'm not in that interview.
Yeah.
And probably wouldn't have got very far. And it worked out great, and had a really really good 12 months with that business. Successful business, still going now. Good luck to them.
Yeah.
And then I got the call up from Precise Mortgages. So I joined Precise. Precise had probably been trading for 1 or 2 years when I joined. launched as a buy-to-let only lender, then went into resi and bridging. And I was recruited to as part of the launch team for second charges. So Precise wanted to get into seconds, so I joined, brought my relationships to the business, my view on credit risk policy, process, systems, and we launched, I think, February, March 2014.
That was a fun time. I know you. I always joke about this, that every senior manager's worked through that kind of group at Precise, but it produced some great people there as well, didn't it? And from what I gather, it was a fun time to be in the market. You know, the rise of Precise was very impressive. At the beginning, must have been nice.
Yeah. I mean, I was blessed to work with some absolutely fantastic people. Can't name them all. But you know, Jamie Pritchard.
I Roger on it because he named every single person, I think.
He didn't mention me, but I'll give him a mention. Roger's an inspirational guy to work with. Gareth Lewis, obviously, Alan Cleary, people like Richard.
Alan on as well, you know. I've seems to got everyone on, but he's bought up, sold off. I think he's doing podcasts now.
Yeah, he's probably harder to get hold of than me. But yeah, I mean, real inspirational leadership coming down from the top, and I love working for that business.
On that leadership side of things, because I asked everyone, but I'm genuinely intrigued by it. I mean, it's very similar from everyone, but why? What is the difference maker between having a leader that produces such good leaders? What was it that they were doing that was so special?
Alan was always very, very clear about the direction of the business, and he was very honest with the sales team. Yeah. You know, we knew what the ultimate. I mean, when I joined that business, it had 100 staff. When I left it, you know, it was part of the One Savings Group One Savings Bank Group. Whilst I was there, it floated, listed on the stock exchange, and it turned
time as well. So you
created a bank.
You kind of all understood what was happening, and you all kind of had to buy into that vision as well that they had of where they wanted their business to go.
Yeah, absolutely. But I mean, you know, he was human as well. You know, he liked to drink. He was a good laugh. You could have a joke with him. But he knew the industry inside out. Yeah. And, you know, he was just a fantastic person to listen to, and spend time to, and always wanted challenging as well.
Really? You know, that is a really important part as well, actually, because you can't know everything, can you? So actually surrounding yourself with everyone that says yes is always a recipe for disaster, isn't it?
Yeah, that's not how businesses grow. Businesses grow by people being challenged and different ideas and different points of view and different people from different backgrounds as well, you know, which is why the diversity, equity and inclusion movement is so good for our industry.
Have you noticed a difference with the DE&I type in regards to you're not surrounded by just lots of yous anymore? You know, I think it's a big thing for businesses that actually follow it, and in regards to mixing up the people they're employing is making a big difference in regards to profitability and stuff.
100%. I mean, it's a journey for most businesses. Yeah. No business is the finished article. But together are real kind of advocates of that, and women in finance, and people laugh sometimes. I'm a white bloke, straight white bloke in my 40s, and I call myself a DEI champion. And people say,
you know what? Funny enough, I had Bros K was on. He's coming on, but as we've already recorded, and I said the same thing. I said I feel so uncomfortable as a white, straight, 40-year-old man talking about how we should do more for gender equality. I said it just feels fraudulent.
You shouldn't do them. You shouldn't do
that. If we're not talking about it, then that's the problem.
Exactly. Yeah. That's the first challenge is getting it on people's radars.
It feels a bit like I'm jumping on the bandwagon a bit, because it doesn't. But I do get it. I understand it. If I'm not talking about it, you're not talking about it, then that's the problem. Is that it's kept in a small group, which is the issue. That needs to be the bigger group.
Yeah. No, I'm a lot more comfortable talking about it now than I ever have been before because I believe in it.
Yeah.
And
I genuinely believe in it. It's something that needs to be looked at, because I was looking at something the other day, and I think I was talking to, but but we were looking at stats on it, and it was actually you're more profitable. So even if you take away the fact that it should be done commercially, it's a no-brainer as well, because you've got like you said, you lose that hive thinking, you get more well-rounded kind of business. So commercially it makes sense, and also ethically it makes sense as well, right? It's just there's no bad side to it.
No, absolutely. Precise Mortgages merged with One Savings Bank. Just after kind of 12 months of lockdown, which was a difficult difficult time.
A weird time for you guys because you built up that business. It was kind of flat for 12. We didn't really know what we were doing for a while. Then you had the buyout as well. Was it a strange time? I've never really questioned it.
It was and I moved house at the time as well.
Right.
It was all change really. I'm very grateful to the management team. Precisely, never got furloughed.
Yeah.
So we got paid and worked all the way through. Pritchard did a fantastic job keeping everyone motivated when none of us could get together and meet each other. And the business pulled out of reined in its lending terms.
Yeah.
Pulled a couple of products, suspended second charge lending, restricted bridging.
How did you deal with that as a sales team when you're obviously having to speak to disgruntled brokers all the time? How do you get in front of that?
Yeah, look, we were one of many.
Yeah.
It was no secret what was going on. We had to take a prudent approach for the longevity and protection of the business.
Yeah.
So, make the difficult decisions today so we can be there tomorrow. Obviously there are lots of pissed off brokers, like there were with COVID, when pipelines got suspended. But it's how you come back from that.
Yeah.
And how you communicate with people. Don't hide behind emails or text messages.
It's not very understand, is it? You've got to be out front with them and say this is the deal.
Of course.
Good brokers also know everyone's pissed off, right? But they're not stupid. They understand what's happening with the money.
Yeah. Look, those phone calls that are the hardest ones to make are the most important ones to the relationships.
Yeah.
After some post merger restructuring, I opted for voluntary redundancy.
Yeah.
For a fresh start. I think I kind of taken it as far as I could in my role after 7 years.
Did you genuinely feel like that about the taking it too as far, because you're obviously then part of a big machine? Did it feel like that? Was it just you were kind of done with that? You couldn't have taken anything. You couldn't have kind of added to the group.
Yeah, I think that. When you merge two sales teams together, there's always duplication. So there's a lot of the senior positions. There was two people going for one job.
Yeah.
And I stood aside.
Yeah.
If I'm honest, my heart wasn't in it.
Yeah.
And I said that to Alan.
Trying to kind of get out because you built something that you loved.
Yeah, genuinely did.
To keep the same love for it.
Yeah, and I had a very frank conversation with Alan, who you could have a frank conversation with, and said, look, if I take this role, I'm depriving somebody else of it.
That wants it, yeah.
And I'm probably not going to be with the business long term. And you could have that kind of upfront conversation with him. Nice. So I left.
That's a very impressive leader as well. That people are still comfortable being able to have that conversation with. I don't think you can say that too lightly. That there aren't hundreds of leaders, especially because there is egos involved as well, and they've got to think about what's best for the business. I think that's always been very impressive from speaking to you guys. That the fact that you could have that conversation with them, I think that goes a long way in being. If anyone takes anything on board about leadership, that's a massive one, right?
Yeah. I'm not going to say I wasn't shitting myself when I had that conversation, but
still got business to run.
Yeah, I've still got a mortgage to pay, right? So I didn't have anything lined up.
Yeah. Together come out a bit later on then, was it? Or was there like a?
Yeah. So I was there for quite some time. I had some share options and stuff.
Yeah.
I was there when the business floated, so I had a cushion.
Yeah.
Plus, I need to do a lot of decorating in the new house as well. There was a growing to-do list at home.
Yeah. That's when your wife was going, maybe that voluntary redundancy looks a bit better because those
exactly.
boxes are still very clean.
I mean, you jest, but that's not far from the truth.
You're talking about long-term goals, and they're like, yeah, but that bathroom needs doing, so
so I took the voluntary redundancy and thought, okay, I can have a bit of time off here. I'm just going to test the water and go. This is the Monday after having the conversation with Alan.
Yeah.
I go for a walk around the village with my AirPods on and phone a couple of people and just test the water.
Yeah.
And at that point in time, so this is kind of early 22. I know it would have been 21, 22. No, early 21 it was actually. So we were just kind of in and out of lockdown, weren't we?
Yeah.
Sandeep Patel was the sales director for Intermediary at Together, who I'd had a close working relationship with at Precise, because he worked at Precise covering London.
Yeah.
And he helped me introduce second charge lending to all of the London brokers. So we worked pretty closely together.
Sandeep Patel also, by the way, only person to ever want to go into financial services when they were younger. Only person I've ever met. Everyone says I fell into it. He said all his family worked weekends, apart from his uncle, who was a mortgage advisor, and he didn't want to work weekends. So he wanted I said to him, you're the only other person that a 15-year-old wanted to be in financial services. Only person I've met.
Fair play to him.
Sorry, mate. Carry on.
Yeah, no. So Sandeep's one of the people that I called, and he lined me up with Mark Goldberg, who is another fantastic inspirational person in specialist lending.
You have worked for some leaders, haven't you? You've worked for some.
Oh man, you can't knock Mark's passion or energy or enthusiasm. He's been at that business over 35 years, I think. He's the first person in the office.
I remember going into when I moved into commercial finance, 2007, 2006, whatever it was, and he came into our office down south, and he was such a charismatic. I didn't know financial services, so I'd never met him or heard of him, and he blew me away. He's so charismatic, and he talked to everyone in there.
Yeah, he likes the
$1 million. When he walked away, and I still use a phrase that I won't say on this because it's explicit, but he said something to us, and I still use it when I'm praising people. That's 20 odd years ago, and it's still stuck in my mind. So he's got that ability, and to impress.
Absolutely, yeah. Sandeep hooked me up with Mark, and he offered me a job, which I was really grateful for, and I ended up having about a week off in between.
With the paintbrush.
It was a busy week in between Precise and Together. And Together is such a fantastic, unique business. Yeah. It's into its 50th year of lending.
That's nuts, isn't it? That is nuts. You think of the specialist lending market, 50th year.
Yeah, a lot of lenders coin the phrase specialist lender, but Together truly are the original specialist lender. What they've done so well over the years is expanding the product offering, so seeing where the market's going, and then quickly moving into that market. An example of that is like the holiday let market. Yeah. As we came out of COVID, when staycation was a big thing, and there was lots of kind of traditional buy-to-let investors that were chasing yields, and we launched our holiday let criteria like in double quick time to cater for that market.
How easy was that as well? Because I know we talked about this. We talked a bit off air, but about you're such a big machine, like to pivot on because you move quite quickly for a kind of a monster of a lender. How easy is that kind of thing? Getting holiday let criteria out in a relative.
Yeah,
is it lots of small?
It's never as fast as salespeople want it.
Yeah, of course, yeah.
But we have all our credit risk and our pricing committees, and various different committees that you have to run a prudent business. Yeah. But we can turn it on and operate quickly when we need to. And I suppose any kind of organisation of Together size, one of the biggest limiting factors is technology and getting IT change through an IT prioritisation. Yeah. But the system that we've got, love it or hate it, on my broker venue system, It does allow kind of manual alterations to things.
Right.
So we can launch something relatively quickly if it makes sense and there's demand. And then a little bit of manual intervention needed before it's fully systemised. Okay.
So it doesn't,
and we're away.
That's the tricky bit, right? It's not so much getting stuff pushed through. You've got good heads there that go, this is going to let's do it. It's more of the integration.
Yeah, absolutely. So,
together. Sorry,
I beg your pardon?
I said pre-warned you about the interrupting, sorry. But
that's all right.
How do you, because I think it's important, because I do speak to a lot of smaller lenders on here and that kind of thing. I think it's interesting as one of the larger, or especially been in it so long. How do you stay on top of your game? How do you, because you got, when you started, there's probably, some other people fighting for the business. Now you've got 240 bridging lenders, for instance, who are nipping at all the big guys, and everyone's trying to nick a bit of your pie, as it were. How do you stay in front of that, stay on top of your game? How do you keep that level of being at the top so long?
Yeah, well, I mean, I can tell you what it's not about. It's not about chasing the price down to offer the cheapest pricing in the entire market.
Yeah.
Because we pick up on a load of bridges that have embarked on that journey with another lender, and they've not been able to deliver, and it gets switched over to us, and we get it over the line. I think it's that continual innovation, continually checking yourself, understanding the market sentiment and the direction that the market's moving in. And all of our field-based BDMs collate feedback on the market every week on competitor changes and appetite. And trends and demands. So there's that side of it.
Because it would be relatively easy to be complacent, right? You're a big business. You've got lots of brokers. People come to you. They know they can rely on you. But it would be relatively easy to fall into that complacency.
Yeah, there's never a sniff of complacency together. It's a very hungry business. I suppose the other big thing is the relationship side of things. That's the second piece. Mark being Mark, he speaks to 3 brokers every single day. How many CEOs do that? He speaks to 3 of his customers every day.
Really?
Hopefully he'll hear the same feedback that me and my team hear when we're out and about. But people value that access to senior people and senior people getting involved to get stuff done when it needs to get done.
That kind of invokes a bit of moaning because you get the chance to speak to someone. So if you've got any problem at all, then I suppose that's where you get better, right? I suppose the more challenging feedback.
And Mark will challenge us on things. Mark will send us press articles in the morning saying, "What about this?"
What's my name on it?
So that's great. There's no room for complacency, which is good. It keeps us all moving forward.
Do you think do you think that's a trickle-down leadership thing as well? Whereas Mark's still hungry, and it shows in the business.
I mean, someone said to me once, like the team forms the attitude of its leader. And that's definitely the case at Together. And the other thing is process as well. That's the other key. So if you look at bridging in particular, for example, the process with other lenders can let them down. Particularly the legals.
Do you think that's a time in the game thing, that slick process, or do you think that's just being so aware of what's important on the customer?
It's both. We know what works. We've got in-house lawyers, but we'll allow things like dual legal representation as well. So our model, we've got great AVM criteria as well, which is valuation bypass, which a lot of the smaller new entrant lenders, their funding vehicles don't allow for that. No. And that is very often the deciding factor. Because the client's got to have time off work, surveyor's got to be booked in. There's no guarantees when the surveyor gets in there. It's the surveyor's attitude, but that working with AVMs has been great across all products, but bridging in particular.
Lenders bringing it into the market, and I don't obviously from the outside, but that does make a huge difference, right? If you can get a decision so much quicker than anyone else.
Yeah. But it's about putting the customer at the heart of everything you do.
Yeah.
How is this going to help our customer and our ultimate customer, but our immediate customer, the broker or the packager.
And how do you stay on top of that as well? Do you have like kind of committees about customer journey? Do you have the constant conversations about customer journey and how it can be bettered, or is it just a natural organic thing that grows because you?
No, we're very into the scoring, the customer satisfaction scoring, which I forget the name of the system that we use now.
We've just got one. I can't think of what it's called, but
it's one of the big ones. Yeah. So everyone post-complete, all of our customers post-completion get surveyed on that. Yeah. But we do broker surveys as well. Mm-hmm. So what they like about us, what's maybe they don't like so much, or is a bit of a limiting factor.
Yeah. Do you do them in interest? Do you do that for your people as well as with customers?
We do.
Good.
We do. Yeah. Yeah. We employ a system called PCOM.
Yeah.
Which is an anonymous kind of feedback system. So we ask every quarter. We ask our staff 100 questions. Give them the opportunity to comment or ask questions privately.
Yeah.
And all of that gets poured over.
I think it's so important. And if anyone gets anything from these, I think that sort of data is so important, isn't it? Not just your customer journey, but the people that work for you, your broker journey.
Yeah.
Because we don't know, do we? Like, people blow smoke at your ass, and they're also moaning about things that aren't probably. But actually, getting that consistent data, I think, is so.
Yeah, I think when you give people the opportunity to voice their opinion anonymously, easy for me to say, and if trends appear off the back of that, then it's probably very valid feedback. There's like a lot of lenders, we're now a working from the office lender rather than the working from home lender. So
how's that?
Obviously,
has that affected you at all, or is that just something that you made a conscious decision of, and why, out of interest?
Our business made a conscious decision to return to working from the office. I think it's really important, I think, in specialist lending, particularly in commercial specialist lending, when none of our products are credit scored.
Oh, yeah.
It's
like a resi, this is the one, bang.
It's not an AI decision. It's about understanding the type of asset, the location of that asset, the client's experience. If the client hasn't got experience, it's about understanding the projections fully. We're blessed it together. We've got board in reception with our long service people. So there's well over 100 people that have been there 10, 15 years plus in that business. So there's tons and tons of experience in there, and you can only learn by bouncing a case off somebody. What do you think about this? Well, there's not much demand for that type of asset. But look at this background security. There's so many different factors that come into it.
We always call it the chair turning magic, because you can't do it's the chair turning of like, oh, that should be with that. Or we're the same in our business, because it's not always cut and dry. This is the person that should go here, etc. Being able to turn your chair around and go, do you know what? I just listened to that, and we need to think about that. And you can't get that at home, can you? I think that's the.
You definitely can't, and it's the knowledge that you glean from overhearing things as well. And I work from the office maybe one day a week, and I'll go around and I'll sit down and I'll talk to people, and it really opens my eyes. Some of the challenges they're having in the office, some of the stuff they're seeing.
Working from home, there's an agenda, right? If you're speaking to someone, there's an agenda. So you're always going to miss out, like you said, on those conversations. Just going, what's working, what's not. You miss out on so many little nuances. I've got this horrible feeling that I say this to everyone, not a negative. I do get some working from home businesses work. However, this horrible feeling of the next generation of people being trained by people that were trained by people working from home are going to be very mediocre. Because you also understand how you've got like 40, 50-year-olds now who are exceptional at their job, feel that they don't need to go in the office because they're good at their job, but actually you were trained by someone in an office.
Exactly.
Really good. So it's kind of a selfish thing, the working from home as well. For us that don't need to go in an office to get better, you need to be in an office to unselfishly give that to someone else.
Pay it forward. Absolutely right. 100%. 100% agree.
It's tricky. You know, we have a couple of customers that have the working from home stuff, so it was it works, but even they will tell you, and they've been on the podcast and say it is tough. It's not impossible, but it is very, very tough. Your training schedules and that kind of thing have to be phenomenal. You know, tracking metrics, but yeah, I just think you lose the personality of the business a little bit.
Well, yeah, and you know, it's good to be surrounded by other people as well.
Yeah, like
you got the DEI stuff that we were talking about before, the learnings, but the social side of things as well. You know, back in yours and my generation when we started our career, there was no dating apps. You either met. If you went down the pub or you met your partner at work, that was pretty much it, wasn't it?
Yeah. You don't get that way.
So, yeah, you certainly don't.
But you know what? I'd love to see the correlation in it as well, because we do talk about mental health and financial services stuff is more poignant now. You know, there are more people struggling. And I know we went through a tough time, but there must be a correlation between people not being able to look around at the guy next to them going, I'm struggling today. Because you can't do that on a Zoom.
Yeah, I would hate it. I get really itchy feet when I'm working from home. I need to be out, seeing people, pressing the flesh.
I also think that people don't know what they don't know. Because you get some younger, because we speak to hundreds of people every week, but I speak to a lot of younger people that want to work from home because of the ease of it, and they keep calling it the work-life balance, which I think is bullshit for us. It drives me up the wall. But actually, they don't know the benefit of working with someone. So they only know what they've been told is that going to work is a waste of time, travel is a waste of time, and they can't see the benefit. And because they've never worked in it, it's a bit of banging your head against a brick wall at the moment with trying to explain to people the importance of all the great people you know who are great, got great by sitting next to someone who was great.
Well, it's good to hear a recruitment expert saying that, actually, because I've heard the opposite, where the recruitment consultants have been peddling the benefits of working from home, and we can get you out of an office and work from home.
I would make more money peddling the working from home thing. Just bullshit. I don't think they believe it. I don't think they've got a team they believe it. I don't know. I had a conversation with quite big packages the other day, and they said, "Are we missing a trick because we're not doing the working from home?" Commercially, it makes much more sense to me to say yes, because I could fill those jobs in a minute. But I said, your whole work hard ethos, and you go into your business and see the culture of your business. Absolutely not. Don't change it for a few people that want to work from home. You have to. This is the way you drive it, but you have to make those decisions. Like, hopefully, in the long run, people see that it's going to benefit them. But yeah, we do lose out on not peddling working from home because. Yeah,
I mean, you've got to be. That's not to say that you're inflexible with it. No. If there's life events and things where
it's to work from home, and
it's important on certain times to work from home. It's good to have that flexibility, but that's the difference between flexible working and hybrid working, isn't it?
Yeah.
We are a flexible worker, but not a hybrid employer.
No, I think that it's just and like I said, it does work. It works for both. And hybrid isn't even that bad, but the full working from home for me, as much as I probably people might call me and say you recruit for these, but we do. I'm just honest with them, and like I say, everybody in those businesses knows as well. And if they say it's the same, they know it's not, because it's too tough. Anyway, that's me ruining a few relationships for me for the last.
Look, there are firms out there, and there's one big firm in particular in second charge lending that all of their guys work from home, and they're a hugely successful business, one of the biggest second charge packages in the UK. And we've adapted how we manage that relationship with them, and it works. But they've invested very heavily in tech, and the tech pulls them all closer together and closes down some of those working from home boundaries. So it can be done.
But it's just hard. I don't think anyone goes into that and says, "Oh yeah, it's the same." It's a very tough gig. So in regards to that kind of, I know we talked about can't be complacent with a big business. What else do you find? Because you've worked in it, right? You've worked in a small business, worked your way up, seen that business float, and now you're working for one of the big guys as well. What are the other significant things that you have to think about in regards to your competition nipping at your heels, in regards to the always being on top? Because there is some pressure with being at the top, right? In the sense that there's only one way to go.
Sure.
How do you kind of deal with that?
Well, it's not something my football team, Manchester United, have to worry about at the moment. But I think it's about, for me, being that lender that supports, and that sales team that supports business partners going into new areas and exploiting new areas. Because, what you don't get anymore is you don't get we're a first charge packager, or we're a second charge packager, or a bridging packager. Wisely, if COVID and 2008 and mini budgets have taught us anything in financial services, it's to diversify. Diversify, de-risk, attract more clients. And it's about being that lender that supports our partners on that journey. I'm not going to say educate, because I think it's actually quite arrogant when lenders say we educate our brokers.
No, I do quite like it, because I do think, because I speak to a lot of brokers, and I do see, well, and I've kept you for way longer than I said, but I'm going to ask you another question about that, because about supporting them on the journey, you must have seen a lot of people, when the resi market was screwed, right? It got tough, and everyone was trying to get more leads, and then some commercial business comes through, but people want to do maybe deals that they're not used to, or maybe deals that they haven't done before. And how easy is it to support those guys? Because I know they're going to get there eventually, but there's also, people see a bridging loan, for instance, and you're doing resi mortgages, and you can, look at the prop fee on that. Actually, 2% of nothing is nothing, right? So you still, how do you deal with that as a lender? Because you still have to kind of support those guys, but at the same time, some of them don't know what they're doing yet.
Yeah, well, we've built different ways that brokers can access our products. So we've got channels in the business, the introducer channel, where they can, if they're less comfortable with doing it themselves, or they can't, they don't find our type of business on a regular basis, but they want to try and keep it in-house and handle it themselves, which is understandable, then they can refer it over to our introducer centre, where we do the underwriting, we do the advice, and we on the regulated side, present it to the customer.
Right. And the still kept involved then? They're just is in-house in the sense it's still there?
Yeah, we've got internal BDMs that keep them up to date with that kind of stuff. So that's one channel that people can use to access us who maybe don't have that experience. And then we've got our packager channel, which is what myself, Tanya Elmaz and Michelle Walsh work on. So people who find our business regularly and put the cases together, they'll maybe work on a case for 2 or 3 weeks, organise evaluation, and send it into us as a package case. So clearly we pay more commission that way than we do on the referral way.
But even sorry, is it like an internal packager then? You just
kind of just for together, commercial and personal. But even within those experienced packages, there's businesses that would want to diversify, and they are not going to defer to option A and just refer it to us, because they've probably got an intermediary or broker to pay or acquisition costs. So option A might not be worth it for them. So we support, we help them with the market knowledge. So not just talking about together, but talking about the wider market, systems, packaging, and what works well for other partners. And in bridging finance, that isn't chasing rates down; it's about deliverability.
And you know what? Every bridging company's USP or non-USP is that they're quick, right? And also,
of course,
all the time. So there has to be, like you, and everyone says it's being able to deliver. It's that comfort of knowing that when you go to a lender, it's not about being the cheapest. It's about knowing that your customer's going to get what they need at the end of the day. The pounds and pence are great. That's not the be all and end all, is it? Commercial.
No, and it's how that lender will react when a curveball's thrown in. So when something comes up on the valuation or as part of the legals, what's their fallback position? How can they cope with that? And how can we navigate around those those inevitable bumps you get in the road, particularly with commercial bridging?
It's a lot to think about for some brokers if they're new to it as well, because you can't just keep, there's so many nuances to commercial. It's
oh, absolutely.
You can't compare it to resi. I had a conversation with someone online yesterday about comparing PTs and bridging and that kind of thing. It just
that's what makes it fun.
Exactly, different world, isn't it? Yeah, so we get paid so well.
Yeah.
Good. So this is the last question, because I've kept you 15 minutes longer than I said I would, so I appreciate it. If someone is coming into the market now, young, fresh-faced James Briggs from 1996, what advice are you giving to them now? As in what's the best traits they need, and how should they act if they want to get far in this industry?
Okay. So the first one would be resilient. Okay, things aren't always going to go the way that you want them to.
Yeah.
You're gonna face adversity. You're gonna face decisions that you don't agree with. You're gonna get made redundant, probably. It's not going to be a job for life. That first job that you love.
Yeah.
And accept that, embrace it, and you'll grow from that experience. Work hard, obviously, that's a no-brainer.
No-brainer, but
yeah, look, work hard and you will get recognised. Yeah. Go that extra mile. Don't be that spinning chair at 5 o'clock.
Yeah.
Because it will get recognised. Yeah. And finally, work on your personal brand.
Yeah.
So I've been on LinkedIn 15 years now. I got the notification a couple of weeks ago, which I thought, bloody hell, where's that time gone? But I think that is such an amazing tool for any industry to tell people what you're up to talk about your successes, talk about your challenges, be honest. Different people use it in different ways.
Yeah.
I personally don't put any family stuff on there. If that's what you want to do, that's cool.
Yeah.
But that's not for me. I think that the ideal LinkedIn profile is someone who kind of blends in a bit of their personality, but also the message of their employer.
Yeah.
I try to put some factual stuff out there, some success stuff that we've had as well, but I try to be human.
Exactly.
Human as well.
Your personal brand, especially not just for your business as well, but for the growth of your career. Like,
100%.
Busy on LinkedIn, could you have had those same conversations with people, when you're looking for your next role and that kind of thing? I think it's really. Obviously, you use a great recruiter. LinkedIn's bad for that, taking money out.
Well, we wouldn't be talking without LinkedIn, would we?
No, exactly. But it's true. 90% of my inbound business comes from LinkedIn, and also the connections I make are great because you can see people's personality and you do kind of connect with people without having to see them. So when, like, the first time you meet someone, you've kind of already broken down that, who are you, because I really like what you say and that kind of thing. It's much easier. It's not the be-all and end-all of relationship building, but it's a nice little...
No, it's not.
Breaker.
It's great on an expo stand when someone comes up to you and recognises you and you've never met them before.
It's just taking away that first 5 minutes of awkwardness.
Yeah.
It's just taking that. It's a trust issue for me. It's nice that people buy into what I'm saying online because I believe in it. And hopefully it's come across authentic enough that you don't have to try and get someone to trust you at the beginning because we want to do the right thing. So I think it's a game changer if you change. And you also, like, you love what you do and it comes across. It's just you've got to. You can't.
Thank you.
If you meet someone, I say this all the time. You can't be great online and then be a knobber when you meet them. You've got to be the same person, haven't you? And I think that all the great people I meet genuinely are. They're just themselves. It's like
be your authentic self.
Yeah, 100%. Amazing. Thank you, mate. I appreciate your time today. Like I said, I've gone over by quite a long time, but I appreciate
good to talk.
Everything you've had to say. If anyone wants to get hold of you, James, or wants to speak to you just in regards to kind of together or you personally, what's the best way to speak to you?
LinkedIn profile is probably the easiest way, or the meet the financial intermediary team on togethermoney.com.
Amazing. Thank you very much. And once again, thank you for your time, and thanks everyone for listening and watching. It's been another episode of NRG Insights. I don't think I've ever said that at the end before. I think I've listened to someone else's podcast. But thank you very much for your time. I will speak to you soon.
Thanks, everyone.